Welcome to the Home Building Hub, your essential podcast guide to building your new home. Hosted by industry experts Colin Bischoff and Darren Brennan, this conversational podcast will help better educate you about all things new home building so you can avoid costly mistakes and enjoy your building experience to the fullest, no matter which home builder you choose.
Hey there, folks. Welcome to the Home Building Hub. You are here with Colin and co-host Darren Brennan, as always. Darren, I want to share something with you. It's exclusive news that I can share with you and our listeners. Did you know this week that there was an interest rate cut passed on? Are you aware of that, mate? I'm pretty good on that. Pretty good.
I saw Oprah Winfrey on the television promoting that, saying interest rate cut for you, interest rate cut for you. In fact, interest rate cut for everybody.
Yeah.
So it's great news, mate. Great news.
We might have seen 4,923 LinkedIn posts within 8 minutes of the announcement, I would say. But what we thought we'd do, Dazza, today is, because clearly we're not experts in that space, what we want to do is, yes, there's been a cut passed on. We've got a couple of guys here who want to help us explain to you, the listeners and the people viewing, what does it actually mean? So we want to go through some key question. What does it mean? What's the impact? When will it be applied? Who's passing it on? All those sorts of questions. And potentially we'll talk about, well, what next? What's the opportunity ahead? So Darren, instead of us trying to make that sort of stuff up, we've got ourselves a couple of special guests. So from Loan Gallery, we have the director, Steve Matsukas, joining us, and his main man, Sales and Business Development Manager, Luke Burrito, as well. So we've got a couple of the guys. They're here. So guys, welcome and thank you for joining the Home Building Hub podcast. And let's clarify for people professionally, rather than Darren and Colin just rambling our way through it. Welcome aboard.
Thank you very much.
Thanks for having us. Awesome. How you going, Daz? You good? I didn't even ask you that.
No, fantastic, mate. Positive news for the week. Things feel like, it does already feel like there's a bit of a buzz, which is great. And, I think that the consumer confidence out there has been boosted a little bit, and I'm sure these guys will tell us all about it and why that's the case. So, that's what I think the market's been looking for, is this first interest rate drop, and we'll see how that looks. And, I'm also hearing rumours there might be an announcement by the time the podcast goes live on Monday. There might be an announcement that there's an election called as well. So it might have been some favours for the Labor Party. We'll see how they go.
Right, okay. We'll see. So for everyone's knowledge, Loan Gallery, the guys there, we've had Steve on before. They're experts at new home construction lending. So that's why we get them on. There's a couple of key, businesses we talk to, and it's really important to get the information from people who know construction. So let's jump straight in, Daz, the questions. So guys, we're going to kick off. Luke, let's get you to begin. So let's explain firstly, what does the cash rate reduction, what does it actually mean for potential home buyers in terms of capacities and repayments?
Yeah, so in terms of what it means, there's probably two main sort of hard impacts that happen straight away, and it relates to capacities and also to repayments. And really, capacities and repayments are pretty much the two different sides of the same coin, really, but we can get to that in just a moment. But from a repayment perspective, so for anyone that's a mortgage holder, I think we looked up the figures before. The average mortgage size in Australia is just over 640,000, and if you fall into that category of being average, you're saving just over $100 a month. And interestingly enough, I think when the RBA talks about monitoring what's going to happen moving forward, they're really monitoring what are people going to do with that extra $100 a month. So are they going to save it? Are they going to spend it? I think if you look at some of the commentary that we've seen over the past years, there are some people who are, living off savings, or, in some cases even borrowing funds from mum and dad to get by. So I would imagine that there's probably a bit of a hesitance among people to save it, but who knows? You ask any two different economists, they'll tell you two different things. So we'll see what happens in that space. And from a capacity perspective, depending on the lender that you look at, it's anywhere from $10,000 to $35,000 of difference in terms of capacities. And I guess the main point there is that doesn't really sound like much where you're comparing to, I guess, the median price. It sounds like a marginal difference. But if you think about how Aussies are with lending and their attitude towards property, I know certainly for us, if we look at our own clientele, when we're helping a lot of first-time buyers, a lot of them are sort of lending up in that sort of upper echelon of what their capacity is, generally in that sort of top 80, even 90% sometimes. So there will certainly be people that are taking advantage of that additional amount that they can get. And if they're building, it could be the difference between a 3-bedder versus a 4-bedder, or maybe sort of standard level of upgrades versus something a bit more premium. So you will see people take advantage of that. And then there's also that lower cohort where that's actually raised the ceiling for them enough to make the difference between getting into the market or not being able to purchase at all. So they're really the two main differences that we'll see straight away.
I think that impact on first home buyers too, Luke, just giving them that little touch more, they could just be hanging on by their fingernails and scratching towards that, getting over the line. And then all of a sudden that 10 to 35K could be just the difference they need to help them, which will be terrific. So, looking forward to seeing a few more first home buyers wandering through display centres, feeling like there's now an opportunity to, get back into the market, which is great.
Absolutely. Yeah.
Great, mate. Steve, maybe one for you. When do you think the rates will actually be applied by the banks? Do you see that happening fairly quickly?
Yes, is the short answer. So most lenders have already come out and said that they'll adjust their retail interest rates off the back of the RBA's decision. The Big Four have all said they'll be adjusting on the 28th of February, so literally the end of the month. Some of the smaller lenders who are a little more agile in the market have already passed that full 0.25% on to their customers. Lenders like Athena and so on. Interestingly, some of the smaller lenders have said yes, we'll adjust our interest rates, but not by the full amount. So I think that's an indication that their appetites for lending have probably been satisfied, and they're using this circumstance to try and moderate their volumes. But generally, most lenders will pass it on, and the disparity between the lenders who pass on the full rate cut versus those who are passing on a partial rate cut is important to people, because that directly flows into the borrowing capacity with those lenders.
If it is the case, Steve, just thinking about that, and you're on the receiving end of a 0.15 instead of the full 0.25, for example, is it worth coming back, obviously, to someone like yourselves to try and renegotiate that for you, because obviously that's money you feel like you're getting robbed of when you're on the other end of that, I guess.
Absolutely. I didn't want to turn this into a promotion for loan gallery refinance capabilities, but I thought it is.
Oh, 1-300, right, yeah.
1-300, get a better loan. It is exactly why you should be talking to your broker regularly. It's also one of the reasons why we have a dedicated team who review the interest rates of our existing clients every 6 months. So for our customers, they don't need to worry. We're going to do it anyway. It's part of the service that we offer to our clients. But if you're just a normal home loan customer with someone else, jump on the phone to your broker, have a chat to them around what this cut means for you, and are you getting the full benefit of it? And if you're not, talk to them about doing something a little bit better for yourself. Because let's face it, the banks make enough money. We don't want to give them any more than we absolutely have to.
Absolutely.
That's good advice, yes. And I think, Steve, before we actually jumped on, you'd said that your appointments had skyrocketed this week since the announcement.
Yes, they had. So we undertook a couple of activities, but even separate to that, we've seen a significant spike in the appointment numbers for our brokers off the back of the decision by the RBA. And I think that shows that people are very, very interested in the topic of the cash rate, precisely because it impacts their home loan interest rate. And we've seen a lot of activity off the back of that movement.
Yeah, it's good. So, I mean, regardless of the home building part, Darren, it's just more good info for people. They've got a mortgage, or they're thinking about going to buy established or build something new. This is the first step. Go and work out where you stand and what your capacity is, and if anything's changed, I suppose.
Absolutely.
That's really good advice. Yeah,
absolutely.
I guess like $100 a month and 10 to 35 grand can make a huge difference to a lot of people. But I suspect there'll be quite a few out there who think, oh, that's not that much. So I think this cut, well, what does it do over and above the monetary component? What does it do for confidence and consumer sentiment in the market is probably the key question for me.
Yeah. So look, I think there's a few different facets to it. Something that's kind of notorious, I guess, of this rate cut is that there's been massive anticipation. Right, this is something that people have been talking about for a long time, and I think that's. I don't think I'm biased being, sort of a part of the industry or in a certain circle. I think even if you speak to, anyone that's in the public or, a lot of people that usually wouldn't be interested in this sort of thing have heard about it, whether it's through friends and family or through media and so on and so forth. So I think that's a big part of it, is that people have been anticipating this. So look, if you just look at purely the numbers, like we discussed before, and like you've just mentioned there, it has to have a net positive effect, because at the end of the day, it creates just that little bit of a buffer. There's some people that if they're borrowing, they won't take up that extra amount, but again, they've got that buffer now to play with, where they can, they've got a little bit more money in their pocket, or they can just feel a little bit more confident moving forwards that they're not potentially maxing out what they're doing. I think the other thing is too, is that because this has been so heavily anticipated, a lot of people have seen this as a signal, right, that the next cycle is starting. We're moving into an era of where the next anticipated move by the RBA is more likely to be a cut than anything else. And there's questions around how much time it's going to take, and when it'll all take place. But I think we've sort of gone up, and now we're on sort of the down path again. So yeah, I think certainly from that perspective, people will be thinking, if I say enter into the property market here, or if I want to try and leverage myself more, I know that I'm doing it from a safer footing. Whereas before it was kind of like, well, we're not really sure how long things are going to last and where it's all going to go. But that kind of comes to the other point, which is, with the announcement, there was obviously the decision that's been made, but also some of the commentary that's come from the RBA as well, which in some sense probably has put maybe just a little bit of a dampener on everyone's spirits, because I guess the commentary was quite conservative, quite prudent when they're talking about the rationale behind why they've made a cut now and what to expect in the future. But I guess that sort of plays into, they obviously are aware that people are thinking, as soon as we get one, open the floodgates, it's all going to start coming through. And I think it's really just, the board sort of leaving the door open and giving them the opportunity to say, okay, don't get too crazy too quickly. Let's just see how this goes and see how it all plays out. But I think, again, over and above that, you've still got the raw numbers don't lie. You can't shape them. That they are what they are essentially, and it will certainly increase confidence for people. But the other thing to consider too, and I might get you to jump in on this, Steve, is that sentiment is not uniform across all of Australia. So in different states, you've got different property markets, and consumer confidence is different as well. But I might get you to jump in on that, Steve.
So I think the biggest impact of the Reserve's decision is on consumer sentiment. There's a number of aspects to that. So if you look at what the Reserve Bank has done in the past, they tend to move in cycles. So when they were increasing rates, there was a cycle of increasing, then there was a cycle of plateaus, and now we've seen a very clear indication that we're moving into a cycle of cuts. And the Reserve Bank has never done one cut and done, never made one move and done. They've always done a series of them. So the impact that has on consumer sentiment, I think, is the more important aspect of what happened last Tuesday, because it cements in people's minds that the worst of what's happened is over, and that it can only get better from here on in. And then off the back of that, there's a lot of people who, for many valid reasons, may have been sitting on the fence. We'll look at what happened on Tuesday and go, well, actually, I think the worst of it might be over. So even though the Reserve Bank came out and said, don't get your hopes up, there's not going to be a flood of these cuts. There will be something, but they'll be measured. I think for a lot of people, it just signals that the worst of what's happened is finished, and that from here on in, things will only get realistically better as time goes on. And I think that's important, particularly for Victoria. I mean, as Luke said, different states are performing in different ways. Queensland's doing really well at the minute. Victoria, in Victoria, due to a number of state government decisions, the property market is quite subdued. So the sentiment, the change that this rate cut makes to settlement sentiment should have a positive impact on what's happening here, because whether you're an owner-occupier, whether you're a first homeowner, or whether you're someone who's trading up, or whether you're an investor, what's happened in Victoria has presented an opportunity where you can buy property that gives you significant value to the upside. significantly more than you may find elsewhere. And understanding that property is, a 5, 10, 15-year investment, it's not a 6-month investment. Buying something now with the value that's available is certainly an opportunity for those who have the capacity. And the sentiment will, I think, tip those people over into actually transacting.
For sure.
Mm.
Steve, how do you see? I'm just thinking about that now, and so there's a bit of a curveball for you, I guess. But obviously, lowering interest rates also lowers them for businesses as well. So, when they have less cost, then that should, in my head, I'm thinking, well, that should mean that potentially they could lower their prices, and we see actually inflationary pressure actually reduce somewhat because of that, which is sort of, they've been jacking it up to reduce the inflation, but in doing so, they increase the prices that drives up inflation. Is that they're going to have any impact on this side down?
I think it'll have a marginal impact. It won't be significant. I think that if you look at the underlying causes of inflation, it wasn't so much consumer goods that were going up. It was in the background. It was all the stuff in the background that was driving the front end cost of goods and services up. So the cost of people, the cost of materials, all this sort of stuff. Logistics had gone through the roof during the lockdown periods. So will it have an effect? Yes, it will. I think it'll be marginal. I think the most important aspect of this rate cut will be the change to people's mindset, particularly in Victoria. I think that'll be the biggest impact. Despite all the caution from the Reserve Bank, people will start to get their heads around the idea that the worst of what's happened is over. We can see some blue sky from here on in. And I think that's the most important aspect of this.
They have a habit of doing that, as a lot of announcements on anything do. Yeah, here's some blue sky, but it may rain.
No, we don't want. See, there's a little bit of inflation is good. Too much is no good. It's like your blood pressure. Having blood pressure at a particular level is awesome and required, but too high or too low is no good for anyone. Inflation does the same thing for the economy. So a little bit is fine because it keeps things chugging along nicely. Not enough or too much, no good. They put you on the tablets for that.
I think people in Melbourne shouldn't have any problem with that. I mean, we've been getting played by the weather forecast for many, many years, so we're pretty experienced in that regard. So,
could you imagine a legal meeting around, okay, we've made the call, we're going to drop it a little bit, and then the legal team would be losing their marbles. Like, you can say that, but you've got to say this to back it up.
Manage the expectations. Yeah.
Too many lawyers.
But in the this day and age, I guess that's expected. It's the way you've got to
Unfortunately,
your backside. Daz, what's next?
I guess, so what's next, Steve? Where's the opportunity now for buyers and investors? What do you see that looking like?
I think there's enormous opportunity for both, whether it's owner-occupied or whether you're an investor, and particularly in Victoria. As Luke mentioned earlier, different states are performing in different manners. So if you look at Queensland, Western Australia, New South Wales, they're doing particularly well. So even South Australia, which has traditionally been relatively quiet, they've just had some major wins on some infrastructure movement, and that's helping their property market. I think in Victoria specifically, there's enormous opportunity. Certainly in the greenfield space, you're seeing the land developers who historically have been very reluctant to do any deals are quite open to doing a deal on a block of land. I think in greenfields, you're seeing the builders have managed to corral their costs and bring them to some sort of normality, for want of a better phrase. So there's opportunities there. I think in the established market, given what's happened with our state government in the last few years, there's enormous opportunity in that area as well. So realistically, if you take a 5, 10, 15-year view on what happens with property, right now is the perfect time to actually make the jump, to take that next step into purchasing a place. And I think Victoria represents better value than anywhere else in the country at the minute, precisely because of the fact that we're relatively quiet relative to the rest of the country.
Yeah, for sure.
Just on that too, Daz, it's funny because when people reflect on property and cycles and this sort of thing, anyone can look at it and be like, if you're looking back on a graph, like this is the time to jump in, right at the bottom of the curve when things are starting to peak. The problem is that people often underestimate where that is because it's generally too late by the time people actually realize that, it's already taken place, right? By the time you start to have that thought of, that was the right time to jump in. And I think, for a state like Victoria, we're kind of at that point in the cycle now. This is not advice to anyone, by the way, to say, buy a property now, you'll do well. But if you just look at the fundamentals and what the stats show us, that's kind of where we're at in the cycle. So, I think for Victoria, there's a massive opportunity here. And when you consider the other states that have been performing quite well, maybe to go back to the RBA from their perspective, a rate cut could be potentially seen as throwing fuel on the fire, right? Because the fires there are already blazing quite well and they're well lit. So maybe that's also part of the reason why the commentary is saying, take it easy. Let's just see how we go, see what happens, and we can go from there. So,
yeah, I agree. I mean, even just in the last couple of days since the rate cut, I've seen a couple of land developers just creeping a price up here or there and that sort of stuff. So, for buyers who are thinking they're waiting for the bottom of the market, you're right, Luke. That's now or you've missed it. Like, you may have actually missed it. And it might not be a lot, but again, it's just chewing into that available funds that you're going to have to borrow. So the sooner you can make a decision right now, probably you're going to get the best deal that's out there. And, we'd expect that as time rolls forward over the next 6 to 12 months, that a lot of that secondary stock will get soaked up over that period of time. We'll start to get back to more of a normalised market. And, That'll be interesting to see what happens at that point. Hopefully we don't fall for some of the same mistakes of the past whilst that's happening, right?
Yeah, totally agree, Des. We've been saying for 3 months, like, if you've got the capacity, go and do it. And that is, heavily Victoria based because that's where we are. The other states actually, we're travelling quite well, as the guys said. But I guess our advice out of this one, Darren, would be buying a house is a bit of a process to build, that is, and even establish one. But it's a longer process to build one. And if you're going to, I used to be triggered by this announcement to go and maybe do a bit of homework, then just start with finance. That's the most important thing. Get yourself worked out in terms of what you can and what you can't do, and then start that process. It's not like you need to go and buy a new home next week. It's going to, the buying cycle takes a bit of time, and the reality is, if there are some other expected cuts or something along the way towards the tail end of the year, or by the reality is you can't get to site next week and have it built the week after. So the impact of your repayments will actually be, you're talking, between that 3, 6, 9 and 12 month mark, where you actually start to feel a little bit of that come your way. So please get that advice.
It's always been a journey when it comes to greenfields, to house and land. It's never been a case of, sign here, settle tomorrow, you move in the day after.
Yeah.
It's always been, historically, it's been sort of a 6 to 12 month journey from start to finish. Timeframes vary depending on where the greenfields is at any particular point in time. But it's never, you're right, Colin, it's always a case of it takes time, it's a process. Get going now. If you're genuinely interested and it's something that's important to you, now is the time to do it. There just isn't a better time than now.
Yeah, I agree completely.
There will be,
so,
Darren.
Steve, if you want to reach out, maybe give yourself a shout out. How do they get onto you guys?
Yeah.
Luke, you're the sales manager. Off you go.
Yeah, absolutely. So if you want to get in touch, website is just loangallery.com.au. The best way to reach us is just through the website. From there, we can allocate you to a broker that's in your area. Doesn't have to be anything, like you said, Colin. Doesn't have to be anything that's where there's an obligation or anything like that. It can really just be having a chat and understanding where you're at and maybe what's in store for the future. I think a lot of people sometimes have hesitance that, if I engage someone, then I've got to, see through the process and do X, Y, and Z. Well, we basically just ask you how we can help. So if that just means it's having a conversation about where you're at today, I can guarantee that you'll take yourself from the position that you're currently in into a better position, meaning that you'll know more, you'll potentially know where you're heading, maybe have some ideas around timeframes and that sort of thing. Or alternatively, if you're ready to go and we can help you out, we're ready to help in that way too.
Yeah. And which states are you guys servicing?
Well, it's funny. These days, we pretty much service anywhere. I mean, our team is predominantly in Victoria. We've got a small office as well in South Australia. But we service pretty much anywhere. It's funny, after the pandemic, a lot of the regulation has changed around, brokers meeting clients, and a lot of what we do is now online. And I think there's still a part of people that's living in sort of the pandemic era, because people do quite often prefer to just do everything virtually these days. And the reality is for us is that whether it's a property that's in Queensland, or it's in WA, or it's in Victoria, it's we treat it the same, right? There's not really, we don't have any physical involvement generally with it. We know all the laws and the regulations and everything that we need to know for each state, so we can help people everywhere.
Yeah, perfect.
Fantastic.
Anything else there, Darren, to finish it off?
No, just want to say thanks so much for jumping online so quickly after the announcement. And I'm sure, like, we're excited. I'm sure, all the buyers out there are pretty excited about the fact that the cost of borrow money's come down somewhat, and looking forward to, hopefully, fingers crossed, some further cuts throughout the year.
I think this is an important marker in the journey for a lot of people to signal that something important has changed. And off the back of that, their thinking needs to change around, or their thinking will change around how they view the world from here on.
Yeah,
that's great. Agree.
Totally agree. Well, thank you very much, guys. Appreciate you getting up early on a Saturday morning so quickly after the announcement. Ready to roll out the episode. So thank you very much. For those who are listening or watching, please leave us a 5-star review on the platform you're on. That'd be greatly appreciated. If you do have topic ideas or questions or any of that sort of stuff, some feedback, then please jump on. It's homebuildinghub.com.au, or you can email hello@homebuildinghub.com.au as well. Other than that, we thank you for your time and look forward to seeing you on the next one. See you guys.
Thank you very much.
Thanks, guys.
Cheers. Thanks for listening to the podcast, guys. And just our disclaimer, whilst we're all about providing value to you, this podcast should not be considered as legal or financial advice. It contains general information only, and you should seek out independent professional advice on your personal situation before making any legal or financial decisions.
1, 2,